Exiting Bitcoin. Not myself, but potentially MicroStrategy. I know it's incredibly tough to grasp, but this is what the CEO of the company mentioned. He mentioned that Bitcoin would be sold if the company's stock falls below net asset value and funding options disappear, calling it a financial decision. What does it mean that we fall below net asset value? Well, it would mean that if the MNAV fell below 1.00, which it did about 2 days ago, it fell into the zero point 0.9 region. So does this mean Michael Saylor is now going to sell from his 650,000 Bitcoin tied to the company? And if he does or doesn't, how would that impact the price of Bitcoin? How would that impact the price of MicroStrategy? These are some of the topics that will be covered on today's video. Today is obviously the 1st of December. It being the 1st of December, you may have forgotten, but quantitative tightening has officially come to an end on this very day. What we've seen in history is that when quantitative tightening came to an end, this current one that we've been in for the past 3.5, 4 years has been the largest amount of QT that we've ever seen. But remember, the amount of quantitative easing experience between 2020 and 2021 was one of the largest ever too. So you're kind of balancing the equation there. But today it has officially come to an end. We know that when we go into QT, from QT to QE, usually there is a bit of a consolidation slash dumpage in the markets. And then after QE is introduced and the liquidity gates open up, it takes about 4 months for that capital to transfer into the equity markets, which push risk-on markets to higher price levels. We will cover that as well. And then to end things off, I want to mention a very important thing. There's been a lot of FUD about Michael Saylor and strategy, but there's also been a lot of FUD about Tether. Paolo Ardoino posted the financials of USDT Tether, and I was absolutely shocked about the data that I've seen in front of my eyes. And I just cannot comprehend how it is possible that people are FUDing to USDT with this amount of strong financials. There is one plausible argument, but if you have any USDT, I personally have a bunch of it, then you may want to stick around until the end of this video too to find out what the deal is there. So guys and girls, with that said, make sure to destroy the like button and subscribe if you enjoy these update videos. Let's get straight into it. Okay, let's begin with the Bitcoin price analysis like we always do. So when we go to the daily time frame, obviously right now it is a Sunday night. Going into Monday morning, the CME futures market opens in approximately 1 hour and 13 minutes. The price of the CME futures is at $91,065. If we go to the spot price over on, the CME futures is, yes, $91,065. The spot price is currently sitting at $91,176. Barely any difference, meaning that there will very less likely be a chance of experiencing a CME gap over this weekend, meaning that there are no officially immediate CME gaps. That is always good news. When we jump into the 4-hourly time frame, what does it look like we're going to do? The analysis is same from yesterday. We need to break above $93.2 thousand if we want to start heading into the 96, 97, and then eventually 99.5, and then into the 107 levels, which I think will be reached by mid-January to retest the daily 200 daily moving average. If we cannot break above 93.2, you're going to see a slow move or perhaps an immediate move into the 81s to try and create a double bottom. We know that there is tremendous amounts of support at the 81 to 8.5 region, 80.5 price region. I don't expect us to fall below much more than that. I do expect price to be rebounding from those levels. Let's just hope for the scenario that Bitcoin breaks above 93.2 and tries to head to higher price levels. Remember, December is a month where we have the festivities and the festive season. So markets will be off towards the end of December as we approach into the new year. And because Bitcoin is fueled by a lot of institutional investments, that is definitely going to have an effect. So I don't expect so much of a change in price action going into the very, very end of this month. So we have approximately 2 weeks to 3 weeks where Bitcoin can create something impactful, and hopefully it's going to be in a positive way. We know that November has been terrible. The average price appreciation we've seen for November historically has been huge. It's been the most, 41.17%. This month was completely off with those expectations. We're down 17%. A year ago, we were up 37% when President Trump got elected into office and we saw a boost in liquidity. This time around, it doesn't look too good. We've looked at the cycles. We know from a macro point of view, the cycles appear to be over, but there's still a good chance we go over into the 107 region, test the 200 daily moving average, and then come down again. So in the intermediate short term, we're fine, but if you go into the longer term, into the next 11 months, I think until we can see that transition phase from quantitative tightening into quantitative easing, and then give it a few months for liquidity to transfer from the central banks into the equity market, that is the time. 11 months is the time frame where I expect altcoins and Bitcoin to rejoice and do something productive and meaningful once more. Here is the graph of the white line represents the amount of balance, or the amount of assets the central bank of the United States, the Federal Reserve, that's what it's known as, holds. This is the graph of that, and then it's overlaid with the S&P 500, and I'll do a correlation with Bitcoin as well in just a second. But when we look into the S&P correlation, obviously Bitcoin hasn't been around in 2008, and the real time where we got massive amounts of quantitative easing and where quantitative easing sort of became a thing was post 2008 recession. Things got really bad in 2008, and the only way to bail the economy out was for the central bank to come around and decide to buy up a bunch of assets. If a central bank of a country is going around and buying up assets, that is the government going out and buying stuff. How does the government go out and buy stuff? Well, since 1913, it's been issuing bonds, and it wasn't able to pay back the original bond investors, so it kept on issuing more bonds to be able to pay the first layer of investors. That sort of leads into a Ponzi, right? So you issue the bonds to raise money, let's say, for example, for a war, and then after the war, you don't have enough money to pay off the initial investors. So what do? You issue new bonds, and then with the money you collect from the new bonds, you pay back the original investors of the first bond, and that just sort of continues spiraling on and on and on again until it gets really worse in the 2008 financial crisis, where they just sort of basically grab a printer, if you want to think about it that way, and start printing money on demand. And that's what's happened since 2008. It's just got significantly worse. A similar situation took place in COVID. They didn't want things to get out of control, so they printed 100% of the money available. They doubled the money supply. The balance sheet of the Fed went from about $4 trillion all the way to almost $9 trillion. They doubled the amount of money available in the system. This is why the S&P went up insanely. It went from the 2,500 to now 6,800. If you go to the price of Bitcoin, it went from $10,000, and exactly 8 years ago, Bitcoin surpassed $10,000 for the first time in history. Bitcoin went from $11,000 to $10,000 to $69,000, doing a 800%, 700% in return. It did this because the value of the dollar lost so much value. If you print money, you print money, but the demand stays the same, then the value of the dollar obviously ends up falling down. And then things that are finite in supply, or things that represent companies like indexes or gold, these go up in value. This is why Bitcoin went up so much in value, because investors flocked away from the US dollar, tried to protect themselves against this inflation and monetary debasement, and put their capital into Bitcoin, put their capital into the S&P, into gold, so on and so forth. So really, what's happening with QT ending, let's just bring it back to the topic. What happens when QT ends is, and this has been the longest QT in history, they've been selling about $2 trillion worth of assets. QT ending is basically saying they're allowing bonds to mature without reinvestment, all right? So they're not pumping money back into the economy during QT. Now, officially, starting today, that's going to halt. And hopefully, when the new Fed chair comes in, that's likely going to take place in Q1 of next year, the current person that will likely replace Fed Chair Powell is Kevin Hassett. He is known to be following the Trump administration's agenda and manifesto quite clearly. So there's a high chance that he ends up cutting rates, and that will cause the Fed to appear as being politicized, most likely. And a political Fed means that the dollar confidence has dropped. If the dollar drops in value, then the price of Bitcoin and equities go up in value. That's a whole separate discussion. But what will likely happen is that they end up cutting rates, and then QE is introduced some point in Q2 of 2026. Give it about 4 months, you're looking at Q3, Q4, where the balance sheet has gone up, and that sort of transitory phase of liquidity exiting the central banking system and going into equities take place, leading the risk on markets to end up seeing an increase in value, which would mean that Bitcoin will probably start seeing good attraction and good levels of price appreciation in just under a year's time. So if you can hodl on, and if you can keep your bags and just hang on there, then I think you will be doing quite well over the next, let's say, 2 years going to 2027. It's going to require patience, it's going to require consistency and persistency, but I think it will personally pay off. Okay, so that's happened today. QT is officially ended. QE will likely begin in just a couple of months' time, and then you're looking at 11 months for the impacts of quantitative easing, where the Fed starts to buy up assets again, like it did here in 2020, like it did in the post-financial crisis. That should help the equity markets, as it has done in every single situation where you've seen quantitative easing. Apart from QT ending, this week is pretty significant. Tomorrow at 5 a.m. my time, we have Fed Chair Powell speaking. He will likely comment on QT ending. This is why it's a very, very important event. Even though it is 5 a.m. my time, I'm still going to be streaming it, so make sure that you're subscribed. Make sure you have the like button on. Make sure you turn on your notifications to be alerted as soon as we post a video, and make sure to have an account over on Weeks or Pinex or Coinflare where you have an account ready to be trading that volatile event, because it is going to be volatile. Then the next very volatile event when we go into monetary policy is in 9 days and 20 hours time. This is where they announce the interest rates. Currently the probabilities sit with an 87.4% chance there will be a 25 basis point cut. Tomorrow at 5 a.m., Fed Chair Powell's comments could change those probabilities. So whilst the next 10 days is where we're focusing on the most amount of volatility, tomorrow at 5 a.m. won't be any shy of volatility at all. Another quite important data point, there's actually a few. So I would say the PMI, the ISM manufacturing, is quite an important one. Also, apart from Fed Chair Powell speaking, that is taking place on Wednesday. It's an important graph because the ISM refers to the business cycle. So you may have heard in this past few weeks the 4-year cyclists and then the business cyclists. The ISM looks at the productivity, or looks at how good the American economy is essentially doing. And you can see in the periods where the American economy has been doing good, that period aligns very well with Bitcoin's euphoric peaks. You go to 2021, euphoric peak, you go to 2017, euphoric peak, you go to even 2013, euphoric peak. It all happened whilst the US economy has been doing well, according to the ISM PMI manufacturing data. When you look at the current data, we had institutional adoption, Saylor buying, treasury companies buying. We've been going up, liquidity has been going up. But when you look at the euphoric part has not existed in the cycle, and that's proven by the social metrics, and we've covered those in prior videos. So there has been no euphoric stage. Bitcoin is experiencing a top for the first time without going into euphoria. And I think that's happening just simply because we're not in a good stage in the economy, and that would have been reflected if the PMI was over 50, which would mean economic expansion. Currently we're below 50, which means economic contraction. Now the data that we're going to get on Wednesday is going to give us insight into if we're seeing a good economy or not. That's the basis of it. And we will obviously cover that on today's on the CryptoGate channel. And then finally, you have the PCE data, which is one of the leading indicators for what the rate should be. So that's going to be good inflation data. If you don't know what the ISM is or the global liquidity cycle, basically, this is another representation. TechDev on Twitter is quite famous for sharing his global liquidity cycle chart. So is Raoul Pal from Real Vision TV. And according to him, this is just the beginning, and it could very much be the case. I just think we will see at least some consolidation, and that's going to take a few months, and then we start moving into new all-time high territories again. Can we identify exactly what the bottom is going to be? At what price? I think it's very difficult to say. I think a good one that Benjamin Cohen highlighted was the 200 weekly moving average. If we take a look at this is a 200. If we go to the weekly time frame, you can see that in every cycle, excluding the bottom of this cycle for one specific reason, that reason being is why we went below the 200-week moving average. It's just you printed so much money, too much euphoria here, so then you ended up crashing more than what you were supposed to. But if you look into the cycles before, then the 2019 bear market ended on the 200-week moving average, so did the 2015 bear markets. And assuming we extrapolate this data and assuming that that will be the same for this cycle, then you would be looking at about $65,000 as the worst case scenario, because remember, this moving average is going to keep on continuing to the upside as time passes. So that could be a good identification for a bottom, but it's not concrete. What I would be doing is I would be DCing into Bitcoin and buying all across the way on a daily basis, weekly basis, monthly basis, you decide, but that's how I would be approaching the markets as it stands. Okay, so that's the global liquidity cycles. Then we finally have to talk about Saylor. I mean, this is a big one, right? So Saylor he always posts something called the orange dot on Sundays. Whenever he posts an orange dot, it means that Strategy has purchased Bitcoin, and the amount of Bitcoin purchased and their average entry price is always published on Monday, 24 hours after this post goes live. So we should be seeing it in like 13, 14 hours. But quite interestingly, instead of an orange dot, Michael Saylor today said, what if we start adding green dots? I think what this means is Saylor is probably forced to go in and buy up MSTR stock. The truth is MSTR is struggling. You're at almost a 1x NAV, which according to the MSTR equity guidance, when you're below the 1x NAV, Strategy will consider issuing credits to repurchase MSTR. So what will happen here is I don't believe that Saylor is going to sell their Bitcoin to refinance and purchase their assets, but I think they're going to refinance on the actual common stock to be able to purchase these assets, which that asset being is the actual common A MSTR stock. MSTR is struggling. If there's a 65% chance, according to Grok, that they get excluded from something called the MCI index, which drives around 2.5 to 8.5 all the way up to $11.5 billion into MSTR stock. If they get excluded from this index, then they could see tremendous amounts of selling pressure going into January and February, let alone if Bitcoin continues to remain stagnant and it continues to go to lower price levels, then obviously consolidation is not good for the leverage product of MSTR, because MSTR is just leverage Bitcoin. And that's going to put you in stress. Currently, Strategy has to pay around $650 million worth of dividends to their preferred stock options, which include Stark, Sturf, Stirred, and all the other bunch of other options they have recently introduced to keep on refinancing and buy more Bitcoin for the common A stock. So they need to pay like $650 million of dividends. And if you look at their main company, which is Software Intelligence or Business Intelligence, currently they're in a loss. So they're not making any income. Their only income comes from their Bitcoin investments. But obviously, if you cannot pay off dividends with your actual business, which is now in a loss, you have to do something. So A, you sell your Bitcoin to be able to pay off dividends, or what you do is you issue more debt by raising money with selling your stock. So I think tomorrow they're not going to sell their Bitcoin. I think they're going to raise capital to go ahead and repurchase their own stock. But this is a worrying sign, because if Bitcoin does continue to remain stagnant, and if MSTR is excluded from the MCI index, and you see all that 2.8 to, let's say, $11.8 billion, then what is going to happen? Like eventually, it could be the case, according to the CEO of Strategy, that the company ends up selling their Bitcoin to cover their liabilities. Very concerning. But for now, I think we're good. We're going to find out tomorrow. I think for now we're good, but it's just a topic we need to keep in mind for the upcoming few months. Finally, last thing before we end off. I know this has been a long video, but I think it's an important one. It's been an important one. Over on crypto Twitter, apart from Saylor, one company that's been getting a lot of hate has been USDT, and I don't understand. Paolo Ardoino, the CEO of Tether, posted the following financial details of Tether. Okay, so Tether at the end of Q3 of 2025 had $7 billion in excess equity on top of the $184 billion worth of stablecoin reserves and another $23 billion in retained earnings as a part of their Tether Group equity. Tether Group total assets $215 billion, stablecoin liabilities $184 billion. All right, so let's cover this. A lot of people have been saying that, okay, Tether is untrustable, they're going to become the next Black Swan event. Hold your horses. Not only do these guys have one-to-one reserve backings for their stable coins, which is $184 billion, right? And those are made up of US treasuries, Bitcoin, and gold, the three most liquid assets that you can probably think of. They have excess liquidity with the amount of profits they make from their interest rate payments that they receive, which is about 4% on the total amount of bonds they have, right, which is about 120 billion. And then on top of that, they have their own company valuation, which will provide them an excess of $30 billion. If anything were to happen, they can refinance, like what MSTR is doing. They can refinance with their common A stock, if you want to call it, which is the Tether equity, refinance and then cover anything using the money they've raised from their $30 billion worth of company stock equity they have. So Tether is doing perfectly fine. They create $500 million of profits from US Treasury yields alone. Okay, there's one viable case where next year we get the rate cuts and therefore their profits are going to reduce. Okay, that's one thing. Another thing is to become an IPO company, they're going to have to remove their gold and Bitcoin and non-treasuries to become compliant. That can put them into a sticky situation. But even though if that is the case, I think Tether is still better than any major bank out there in the world deploys the same collateralization that what Tether is doing. All of your big banks, they use fractional banking. So only 15 to 20% of customer assets are held in liquid, instantly liquidatable assets. The remainder of assets are God knows where. Whereas you have Tether, there is 100% asset backing plus over collateralization. So I trust Tether compared to any other bank in the world when it comes to one-to-one reserve backing. All right. So even though there could be some red flags here and there, it is totally incomparable to the horrible situation and the corruption that we have in our current traditional financial system. Tether is literally the highest private demand, the highest amount of US Treasury buyer for a private institution in the world. In fact, it has more treasuries than some very large sovereign nations. I wouldn't be worried about Tether personally. You know, the facts are there, it's in front of you, come to your own conclusions, but it's just orchestrated FUD. We're getting USDT FUD, we're getting MSTR FUD, we're getting so much FUD. Honestly, if you ask me, guys, I would be dollar cost averaging here. You know, a lot of this FUD is baseless, it's funny, and when these things come up, it happens during the lowest of the lowest capitulation events. And usually from that point onwards, you tend to go to higher price levels. I mean, you look at BlackRock, the biggest institutional asset manager in the world, they just said today that the BlackRock ETFs are its top source of revenue. Top source of revenue. And this is a non-euphoric cycle. Non-euphoric cycle. And BlackRock is making its top source of revenue from the Bitcoin ETFs. Elon Musk came out and said, nothing can stop Bitcoin today because Bitcoin is totally energy and you can't tax energy and you can't stop energy. Bitcoin is monetary energy. You guys need to understand that Bitcoin is here to stay. The financial system is so corrupted and Bitcoin is the only remedy. So if you want to have some of that medicine for the financial system, then you better start to stockpile now, because in the future, it's going to get more expensive, more expensive, more expensive, and there's just not going to be enough Bitcoin to go around for everyone. So guys and girls, I hope you enjoyed this video. Don't worry, I'm going to make more videos throughout the day, but I just wanted to break down sort of everything that's happening at the moment for you guys on this specific video, and then we'll break it down into pieces throughout the next 24 to 36 hours. So guys, thank you so much for watching. Take care, and I'll see you all on the next video very soon. Bye-bye, guys.